Hello, hello, hello. My name is David McGard, and this is Property Value, where I talk about commercial real estate focused on South Florida. It is Monday, April 18th, 2022. So welcome. Let's read some news articles. And first on the ballot is a pretty funny article. Caught my eye. Let's bring it up here. Here we go. And this is in the South Florida Business Journal, written by Brian Bandel. It says floating private club with pool planned on Miami waters. So what does this mean? Floating private pool. It's pretty crazy. It says Miami is known for fun clubs and its majestic bodies of water. And a new project aims to provide the best of both worlds. Ark House, is planned as a floating members-only club. The project, a cost of $3 million to $4 million to launch, would consist of 4 houseboats tied together while docked at the city. Ark Up is a company behind the house-style yacht docked off Star Island. So if you ever driven to Miami Beach and gone over the causeway of from the city to Miami Beach, and you look to your left, which is your south or north, you'll see this house just kind of floating right outside of a mansion, of a water front place property, and everyone wonders what it is. Is it a boat? Is it a house? Is it real? Is it a model? So Ark Up is the company behind that house style yacht docked off the property in Star Island. The Ark House version of the vessels will be smaller. So this is what they're talking about. It's going to be, compared to what they already have there at Star Island, this will be 40 feet long with 2,000 square feet of interior space each. They would be connected in a square formation and a plexiglass barrier between them, creating a pool using natural water. The vessel could easily separate and go cruising, he added. So it's going to be 4 separate vessels connected together with plexiglass and a pool in the middle, 2,000 square foot interior space. Okay. Ark House is currently in negotiations with several Miami marina operations about where to dock the vessel. Possible locations are being considered near the Perez Art Museum, Miami. That makes sense because it kind of looks like an art installation in the water floating. So it could be outside the museum or at One Paraiso in Edgewater, which is a multifamily complex. The club would offer food, drinks, and fitness classes. So who wants to go out to a boat to take fitness classes? That's a little, okay, it's stretching it. It could also host private parties. That sounds more likely. And go on cruises. I don't know about go on cruises, but okay. I don't know if it goes on cruises together as 4 pieces or pieces apart, or I don't know. It would not host overnight stays. Let's see. The membership ranges from 5,000 to 7,500 manually. Once it opens, early memberships will be 10,000. So pre-opening memberships 5 to 7.5. Once it opens, they go up to 10. The actual creators, Pirovi and Pava, run a private event space in New York, realizing how lucrative the members-only club business can be. They open a second location on the rooftop of Fahina Hotel in Miami Beach. It says Natalie and I were joking that we should put a private membership club on a solar-powered yacht. Pirovi said, when we saw the Ark Up boat, it wasn't a joke anymore. Pava said 2 of the houseboats would be set up with bars, while the other 2 would be more for private dining. So we got 2,000 square foot each. It's 8,000 square foot. 2 allocated for bars and cocktails, the other two for the fine dining. There would be morning meditation and yoga activities, I guess, out on the decks. Um, how would these people get there? Would they paddleboard out there? Is there going to be a private yacht that comes and picks you up at your house? Who knows? It is Miami. They could also go for sunset cruises and bring a DJ on the weekends. In addition to working on a solar power, in addition to working on solar power, Arc House plans to be environmentally friendly. Pavolny said, for instance, the company will minimize trash blowing overboard. He said it would partner with Marine Research Group, Seaworthy Collective, to charge its underwater drones at the boats. It's not only a beautiful place to be, it's practical to be on the water. Arc House is looking to raise 1.5 million from crowdfunding for its project, including a crowdfunding campaign with a $1 million target via the Republic platform. So far, it's raised about 400,000. The company plans to expand Arc House concept to other cities later, with New York likely next. Okay, so there you go. Entrepreneurship out in front, taking the concept of a floating, somewhat house in front of a very expensive property on Star Island here in Miami Beach and expanding it and putting them together, serving cocktails, having the water. It seems like something more like you would see in like Indonesia, where the water doesn't change. I mean, what happens when there's hurricanes? Where do these go? Do they pick them up and take them out of the water, or do they just chain them down? And I mean, I don't know. It's a hard concept to see, but they've already raised 400,000. Their target is 1 million. So I hope them good luck and look forward to seeing how this story transpires into the future. Now, my next story is a long one, and the title, it's from The Real Deal, South Florida Real Estate News. It's by Matthew Nixa. It's about student housing and what's going on in that area. And, 2020 when COVID hit, I wondered about student housing. Student housing for the property in real estate and commercial real estate. It's always been a great thing, right? Because students have to go to school. They need somewhere to stay if they're out of state and they don't live nearby. So student housing was a no-brainer, and they rented it, by the bed. It's not by the room like an apartment building, so you can put in multiple beds into a singular room, and that just increases your net operating income and adds to your bottom line, ultimately adding to the value of the properties, making it a great investment vehicle for institutional players, such as the two I'm about to talk to right now. So the headline says real estate investors eye student housing as college dorms come up short. College dorms come up short. So the two gentlemen in the pictures is on the left is Blackstone Stephen Schwartzman, and on the right is Brookfield's Bruce Flatt. People's Park, a Berkeley institution since Governor Ronald Reagan called it in the National Guard to quell protests there 5 decades ago, may be the epicenter of a national student housing crisis that has real estate giants like Blackstone on the prowl. After years of back and forth, the city of University of California, Berkeley, agreed in March to relocate the park's homeless encampment to allow for student housing. How nice of them. They're going to move the homeless out of the way so the students who actually want to come and learn have a place to sleep. The original reason the university bought the land in 1967. The 1,100 new beds are sorely needed. Berkeley long ago ran out of rooms for its students, and now can house only about a fifth of its population of 45,000. That's the lowest. That's the lowest proportion in the UC system. A fifth of its population. That's all it can house. It's a town-grown conflict with the ramifications across the nation, from New York, Yonkers, where the tiny Sarah Lawrence Collins rented a hotel last fall to house students, to UC Santa Barbara, where Warren Buffett's right-hand man, Charlie Munger, is trying to tackle a housing crunch by designing an almost windowless dorm. So this is happening across the nation, uh, coast to coast. So as investor interest, as with any crisis, it's only a money-making opportunity. Landmark Properties, whose 55,000 student beds across 30 states makes it one of America's top 10 student housing managers, said in March it formed a $1 billion venture with a unit of the Abu Dhabi Investment Authority to buy and operate student housing properties that haven't reached their full potential value. That's just an initial target for Landmark, based in the University of Georgia's hometown of Athens, and the authority, which managed about 830 billion in 2022 or 2020. Sorry. It was the second time in less than a year that Landmark joined forces with an institutional investor. Last August, Landmark and Blackstone Group, which operates a 280 billion real estate business, formed a 784 million joint venture to buy and recapitalize an 8-property, 5,400 bed portfolio. Brookfield Asset Management, which oversees 690 billion, in November formed a partnership with Scion Group, a private student housing owner operator, to buy a 27 property portfolio with more than 17,000 beds, making Brookfield's first U.S. bet on student housing, Bloomberg reported. Excuse me. University and college enrollments keep rising, though they dipped during the pandemic, like I mentioned before, and the off-campus housing sector generally doesn't track the economy, making it a phenomenon diversifier in commercial real estate portfolio. Let me read that again. It says, the off-campus housing sector, which is student housing, generally does not track the economy, making it a phenomenon diversifier in commercial real estate portfolio, meaning every investor institutional needs some of this in their portfolio, said Fred Pierce of San Diego's Fierce Education Properties. Since 2007, the company has acquired more than $1 billion in student apartments, totaling almost 27,000 beds near big name institutions like Michigan State University, Iowa State University, and University of Florida. Investor optimism is fueling record pricing. A joint venture of Chicago Core Spaces, a residential developer, and Harris Street, an investment management firm, paid $21.5 million in January for about a third of an acre across from UC Berkeley. So an investor or a developer can come in there and buy land and build, but the own university is not buying their own land and building. Strange, right? Wonder where the money and profit is going for the university. Not into housing. The seller had the city's permission to build a 232-bed, 87-unit student housing project, meaning the partnership paid more than $247,000 per unit to take control of the site. That's a big number. $247,000 a unit. That's for the land. That surpassed the previous record by 26%, according to January news release from CBRE, which represented in the seller. But the reason why they would pay $247,000 per unit of land is because they can fit 232 beds in there. It's only 87 units, but inside that 87 units, it's a 4x. That's how student housing makes a lot of money. It's almost like with doing Airbnb, where you have one room, but you're able to rent it 7 nights a week. You have one room, but you can put 4 beds in it 4 times. First-year applications to schools with populations of at least 10,000 that admit fewer than half of its candidates rose 11%. So if you have a school of 10,000, they admit half of that, those numbers rose 11%. Compared to 2019 and 2020, even as overall U.S. undergraduate enrollment dropped by almost 7%. Room and board costs in the meantime have risen steadily in the past decade, in part due to surging home prices. Seems like every price in real estate, commercial real estate, has risen in the past 3 years. Some selective schools have done a better job than others of keeping those costs under control. UC Berkeley had a 12% increase in annual room and board fees from 2009 to 2019 for 10 years, which were about $17,000 $200 a year. While such fees jumped 37% at the University of Maryland, College Park, which is about 5,000 fewer students, according to the Chronicle of Higher Education. Rents for properties in Berkeley, similar to the one core spaces, had planned have reached as high as $14 a square foot a month currently. When CBR's Keith Manson, who helped broker the core Harrison deal, was marketing apartment project sites for sale in the best areas of the Oakland and Berkeley in 2019, people would underwrite $4.50 a foot. Today they're going for $14 a foot. 2 years ago, they were going for $4.50 a foot. $4.50. What an increase. Back to school. Strong enrollment demographics at top tier universities as new private dorm supply is at the lowest in more than a decade. Means it's a highly attractive supply demand environment. All right, let's read this again. Strong enrollment demographics at top tier universities as new private dorm supply is at its low in more than a decade means it's a highly attractive supply and demand environment. Enrollment's going up. There's nowhere for the students to stay. What's going to happen? Dum, dum, dum. The developers step in and the investors make the money. Shares of Austin-based company, which manages more than 200 U.S. student housing properties, ended a 2021 at all-time high of $57 and have hovered at above the level since then, even after the company's net income fell by more than half last year to $36 million. All-time high at $57 for its stock, even though the company's net income fell by more than half last year to $36 million. Something seems off there. If you're a pension fund or a life insurance company and you're going to invest across commercial real estate, it makes sense for you to be looking at some of these niche asset classes. While the market's outlook is bright for investors, it's everything but for students. Of the almost 200,000 2 and 4 year of the almost 200,000 and 4 year university students who respond to a national survey last year, 14% said they had been homeless in the past 12 months. Aren't all students homeless? Isn't that why they're going to school, to get out of their parents' home and live on their own for a while? Hmm. The caveat, the respondents represented 1% of the total population of students, and colleges and universities aren't required to keep track of homeless students. The latest federal data, which found that at least 56,000 college students were homeless, dates back to 2015. This is kind of funny. I don't know. I don't really understand. Homeless college students. Where are they? Where are they going? They just went to school and had nowhere to stay, but they just got into school but couldn't find a couch or girlfriend. In addition, colleges have plenty of reasons why they can't or choose not to graduate housing for all enrollees, including the availability of developable land, the affordability of residential market, and class sizes. In any event, the problem is undeniably dire. In August 2018, a month before the start of the fall quarter, UC Santa Cruz emailed about 6,000 faculty and staff members, asking them to open their homes to incoming students. The Chronicle of Higher Education reported the university offers on-campus housing to about 9,300 students, half its population, and the highest proportion in the UC system. That leaves the other half to find living quarters in pricey area. While UC Santa Cruz wants to add 2,100 on-campus student beds, it's been hampered by 2 lawsuits filed by local groups. Many new and returning students were struggling to find affordable housing options in the week before the start of the current academic year. Band-Aid on a bullet wound. In Berkeley, the multifamily residential development pipeline is bustling after decades of sitting idle. Developers have filed plans with the city for more than 500 new apartments over the past 6 months alone, more than half of them near UC Berkeley's campus. The shortage has been a self inflicted wound because for many years it was impossible to build anything in Berkeley, said developer Patrick Kennedy, who lived in the city for 36 years and has built more than 500 apartments there since 1998. UC Berkeley Chancellor Carol Christ vowed in 2018 to build 7,500 beds over the next decade, spread across People's Park and 9 other sites. Even if that target is met, it's still only part way to achieving its housing goals, as university officials acknowledge. Some higher end institutions seeking a temporary solution to their long term housing problems have been putting their students up in nearby hotels. That can't be cheap. It's an approach that one University of San Diego sophomore likened to putting a band aid on a bullet wound in an interview at news outlets Cal Matters last year. That's what happened to Alexander Farr, a student at Sarah Lawrence College, which just has 1,700 students. The school put her and about 100 others in the Hyatt Place, about a 20-minute walk from campus last semester. Even after Farr submitted her housing application and deposit on time, some 4,500 students applied last year for about 400 freshman slots, a record number that was up 20% from the previous year. There was a shuttle to and from the hotel and school, which was not that reliable, said Farr, who grew up in Australia and is majoring in liberal arts and concentrating in music and Chinese. I would usually go to school with all my books for that day and not come back until it was dark. For the upcoming school year, she's looking to live with 7 friends in a converted house on campus. Because of her semester long stay in the Hyatt, she'll get to choose her housing 2 days before the selection process opens to most of the student body on April 16th. Will it be the house that I want? Probably not, the sophomore said. Will I be housed? Probably. So, huge housing problem for the students. Big opportunity for the developers and then the investors who invest in those developments. I don't think that we should have a housing problem for students. It's one thing to say that we need people to get educations, and then for those students who actually do good in school and care about going to colleges, fill out the application, get accepted, are excited, leave their parents' house, go to stay. Even at the Sarah, the last person that they spoke of in the article, they accepted her money and then they didn't have a place to put her. So why is colleges accepting students' money for housing if they don't have a bed for them? One. And why is this so hard to find land that's buildable, or why can't we make the numbers work for the students? And I don't see this getting better pretty soon with this high inflation and the rates going up, the cost of money going up. Hopefully, something happens sooner than later and we get more kids and more beds, or that whole experience of actually going off to college could maybe just drift away and more kids are going to be, you know, going to school online and staying at home a lot longer. So, how about this? And this is the truth of what's really going on. So, Wall Street Journal markets, and on the screen, we're looking at the 10-year Treasury note for, again, April 18th, 2022. It's at 2.866. We're getting close to the 3 mark. Just a month ago, we were talking about crossing the 2 mark, 2% mark. On April 14th, it took a huge leap up to the 2.8. What's going to happen in time to come? I wonder where that number will be when we go to 2023. Now, the mortgage rates. If you're going to buy a house, you're going to refi, what do as mortgage rates approach 5%? So, today's national mortgage rates trends. For today, Monday, April 18th, 2022, the average rate for the benchmark 30-year fixed mortgage is 5.2%, an increase of 19 basis points over the last 7 days. That makes me cringe because I still need to get a mortgage. for my townhouse I just renovated. So it says if you're looking to refinance your current loan, the national 30-year refinance rate is 5.24, up 17 basis points over the last 7 days. Meanwhile, the national 15-year fixed refinance rate is at 4.45. But you got to pay it off faster. That means your payment's going to be higher. Not everyone can do that 15-year, but it is smarter. That's up 22 basis points over the last week. Whether you're buying or refinancing, go to Bankrate. Often has offers below the national average to help you fund your home for less. Mortgage industry insights. Let's see what they say. What do as mortgage rates approach? What to do as mortgage rates approach 5%? Most experts expect mortgage rates to rise this year, but it happened faster than many predicted. I don't know how that's true because the Fed was pretty much bullish on raising rates and have been, and out there in the public saying it. So I don't know how they say, but it happened faster than many predicted, averaging more than 4.5% for the 30-year fixed loans in late March. Rates could be heading to 5%. They are. We just read that. That means it's more important than ever to compare rates before selecting a lender. Conducting an online search can save thousands of dollars by finding lenders offering a lower rate. Although today's rates aren't crazy by historical standards, they are higher than they have been in 3 years, and that's likely to have a few knock-on effects in the housing markets, though it probably won't cause housing prices to decline significantly. More than a decade of chronic underbuilding and millions of millennials moving into the home buying stage of life has created a significant imbalance between housing supply and demand. While rapidly rising mortgage rates may temper the demand somewhat, don't expect home price appreciation to come to a halt. A more modest pace of appreciation is the likelier of the outcome. I'm David McGard. You're just listening to Property Value. Have a great week. Enjoy your Monday. I'll see you tomorrow. Bye.